What's going on, YouTube? We back again with another banger. All right, so today we're gonna be talking about the almighty candlestick, right? Because are you really a trader if you're not really hitting them candlesticks? You might use line charts, but we all know the power of them candlesticks. And if you don't know, you're about to know. So let's grow. Boom. Wait. Next slide. There we go. All right. So first, we're just gonna go over a few terms and definitions. Just kind of make this a little easier as I go along, so you kind of know what I'm talking about when I say it. So we got candlestick charts, which is just a financial chart used to describe price action. Price action. It's just the movement of price. What is price doing? How is it fluctuating? Is it making different candlestick patterns, chart patterns, things like that? Bullish, price is going up. Bearish, prices are going down. Shorts, that means they selling it off. Longs, that means we buying it up. What's that one? You got a wick. So the wick is just the area of price that price went to, but it didn't close at, right? And we'll go over this in more detail. And then you have every candlestick can be represented in several different time frames. The main time frames that I like to use: 1 hour, 4 hour, daily, and a weekly. What you also have like a monthly, 2 hour, things like that, right? So the difference in price, candlesticks is, just different candlesticks tell you different things. Just combines time. So firstly, move myself over here. All right, so first, this green candle and red candle is typically the two candles you'll see when you're looking at a chart. So the bullish candle is really going to be represented by your green candle, right? Showing that price has went up since price came in. The red candle is going to represent a bearish candle, showing price kind of went down since price opened up for that certain time frame. So let's just say we're on like the 1 hour time frame and we see a bullish candlestick, right? So the bottom of the candlestick is the open. This is showing you where price opened up at. The top of the actual candle is the close right here, right? So this is telling you where price closed at. This area right here makes up the body of the candlestick, right? So this area right here, this is called the body. We have these two top areas, right? We see those? Those are called the wicks. So remember, the wicks are the area of price where price went to, but it didn't close it. So this is telling us, okay, price opened up. At some point in time, it went below the price point that it opened up at, but it failed to close at that price point, pushing back up. So when it failed to close at that low or at those price points, it creates what we call the wick. Same thing with the high, right? So it's showing us where price went to, where the high of this hour candlestick, 4 hour candlestick, daily candlestick, whatever it may be, what the high of that candlestick was. But it also shows us where it failed to close at, which created this wick, showing like, okay, we have more bullish pressure, but it didn't close at that high, and we had some bearish pressure, but it didn't close at that low, right? So this is the real body. There's going to be your open. There's going to be your close. It's going to be your high of that session or that time frame, and there's going to be a low of that time frame, right? And now we move on to our bearish candlestick. So when it comes to a bearish candlestick, the open is now going to be on top because it's showing us that price went down since price opened, right? So key things to remember. So now the open is at the top of the candlestick. The close is at the bottom. And the same thing with the wick still happens, right? So this is showing us, okay, at some point in time when price opened up in this time frame for this candlestick, price did go up a bit, but it failed to close at those areas. So this is showing us the high, right? So now we have this wick here as well as with the bottom, right? It's showing us price pushed down a lot lower, but failed to close at those absolute low levels. And so once it retraced back up, it creates our bearish wick, right? So that's why we have our wick here. So this makes up the real body. This is the wick. The wick really just showing price rejection of a certain area. Now let's move on to a couple candlestick patterns, right? So candlestick patterns are the different formations that a candlestick can make. Now these can come in several different ways. You can have single candlestick patterns, double candlestick patterns, triple candlestick patterns, and you also can have some neutral candlestick patterns. Now these candlestick patterns can be either bullish or bearish, of course, and also they can be neutral, really just telling you the indecision in the market. Like, market really isn't moving anywhere. Like, there's both buyers and sellers in the market, causing price to kind of just be in the same area, right? So we're not gonna go over all of these, but we're gonna go over some of the main candlestick patterns that I like to use. If you do want to get more familiar with candlesticks, there is two ways you can go about that. You can either go to Google, type in candlestick pattern cheat sheet, right? This is how I got this picture. Just type in candlestick pattern cheat sheet, and you'll see tons of images pop up showing you different candlesticks. Like, we have when it comes to like bullish, like a few of the main bullish single pattern candlesticks, hammer, right? We're gonna go over this inverted hammer, dragonfly doji, spinning spinning top, which honestly I use the spinning top as more of a neutral ish pattern. But also you have some hanging man, which is really just the opposite of the hammer, shooting star, gravestone doji, bearish spinning top, bearish engulfing. When it comes to double candlestick patterns, you have the bearish engulfing, really powerful candlestick pattern. Tweezer top, really powerful. Dark cloud cover, really insightful. I don't use that one too much. Bullish engulfing, piercing line, tweezer top, morning star, love the morning star pattern, three white soldiers, et cetera, et cetera, et cetera. Now we're going to go over a few of these, but just to hint and talk about a few of these candlestick patterns, just before we get into the main guts and glory of this video. All right, so candlestick patterns and formations. Now that we got an understanding of candlesticks, we can now get a better understanding of candlestick patterns, right? So like I said in the beginning, they can either be singles, doubles, triples. They come in different combinations. And these candlestick patterns are really just used to help us get a insight on where price may be going, right? So for me, I'm a naked trader, so I use price action, I use price movement, I use my candlestick patterns a lot, candlestick formations a lot, as well as a few other things. But in reference to the candlesticks, I use these a lot because candlesticks tell you exactly what price is doing, right? It's not like an indicator that lags behind price. It tells you exactly what price is doing. And if you know how to read these candlesticks, honestly, it puts you in a totally different category of trader, because now you're really able to read naked price and see what the market is really telling you. So back to the second way that you can understand candlesticks. There's also a lot of books that involve candlesticks, and I'll probably drop a few of my book recommendations below in the title of this video. One being the Japanese Candlestick Bible. Look that up real quick just so I can tell you the author. I didn't really plan on actually talking about it. Like, it just came to me to speak. All right, so not Japanese Candlestick Bible, but this is a really good book on Amazon, The Japanese Candlestick Charting Techniques by Steve Neeson. It looks like that. I'm not gonna dig it out, but very insightful book. Has tons of patterns, so can definitely educate yourself when it comes to that. There's, of course, you can always Google Japanese candlestick books, and you'll probably have a lot of options to pick from. So whatever you choose to pick from, it'll probably give you the information you really want. Excuse me. All right, so now I'll talk about our first candlestick pattern, which is one of my favorites personally, which is the hammer candlestick pattern, which is, like we saw in the picture, a bullish candlestick pattern. So typically what you're going to do is you're going to see these hammers at the bottom of a market, right? At the bottom of a downtrend. And the best way I can say to remember it is think of it as the market is hammering out, right? So if we look at this candlestick, we see price has a small real top, right? Little to no upper wick and a long lower wick, right? So what this is telling us is that price we see it was in a downtrend. We see price try to push lower but failed to. Buyers came in, bought this up, closing to here, right? Giving us really a foreshadow that, like, okay, now sellers are losing momentum, buyers are coming to the market, pushing price up, and we see after this hammer, we see what price does. We see price does start to rise back up and become more bullish for that time. So you want the real body to be pretty small, and you want the wick, the lower wick of this candlestick, to be about 2 to 3 times the size of the real body for it to be a real hammer. We'll try to find some examples on a real market here soon. Probably once we get done with this presentation here, see if we can find a couple hammers in the market. Inverted hammer. So inverted hammer is the same as a hammer, but instead of the wick being to the downside, the wick's to the upside, right? So we're seeing we had sellers in the market, boom, 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 sell, you know, heavy selling momentum. And we see now we have price with this small real body, right? Little to low wick on the downside, and now we have a long shadow wick to the upside, right? Showing us that buyers really came into this market, boom, 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 tried to buy price up, right? Pushing price up, push. They failed to close at these highs, push back down, but it shows us that the buyers are gaining strength, right? We see little to no movement to the downside, right? So it's telling us the sellers are losing strength right now. So now we can see the buyers have come into this market and they're really trying to push this price up. And we see after the close of this candlestick, you really do start to see price take off. Whenever it comes to these candlestick patterns, though, you want to make sure that you're paying attention to the next candlestick that comes after it, right? Of course, the first identification candlestick is important, but you want to make sure no matter what you're doing that you get kind of that confirmation that what you're seeing is true, because you can have fake outs and things like that. I'll probably talk about that later on, but you can't have fake outs. So you want to make sure that you're really getting a confirmation. So I do like to see another bullish candle close after my inverted or after my hammer, just to kind of give me that real confirmation, unless I'm seeing it come into a nice support zone or creating a higher low or some sort, you know, and then it's like, okay, now I can use that as kind of a little bit more of my confirmation. Hanging man. So the hanging man is pretty much the bearish counterpart of the hammer, right? So the hanging man you're going to see at the top of a bull run. So we see prices uptrending, boom. And now we see this hammer, right? Small real body, little to no upper wick or shadow. And then we had this long lower shadow, 2 or 3 times the size of the real body, right? Showing us that sellers were coming into this market. They were pushing price down, pushing down. They really failed to keep price at its lows, but it identifies that, okay, bulls are losing momentum. Bears are coming into this market, and they're showing us that they're here to play. So whenever we're seeing this pattern, you kind of want to take a look, especially if you're nearing like a resistance zone or you just create a higher high. You definitely want to take this pattern into consideration. Take this candlestick formation into consideration to kind of be identified that, okay, it's possible now the bulls are losing strength. The bears are coming into the market, and they come to make some noise. All right, so shooting star, which is this candlestick here, which is pretty much the same as the last one, telling the same thing, right? So we see bullish uptrend, we see green candles, and then we see this small real body, little to no lower shadow with a long upper wick, right? Showing us that buyers were still in the market. They were trying to push price up, but them sellers came in. They said, no, take it back down. We want to go the other way, right? So now that the sellers that came into the market is showing us this long wick that price failed to capture. You see price tried to go up. It failed. Sellers came in the market. And like I said, they come to play. So typically you'll see patterns like this right at a resistance zone. If price just made a higher high, things like that. Morningstar pattern. Now we're getting into our 2-3 candle patterns right now, right? Really a 3 candle pattern. So when it comes to a Morningstar pattern, you'll see price on a bearish down run, right? You'll see a nice bearish candle. Then you'll see what I like to call a spinning top candle, right? We talked about that in the beginning, a little reference, which is more so a neutral candle, which is telling you price really failed to go anywhere, showing you that it has potential, a lot of good potential to go to the upside, right? Because it's showing us like, okay, price went from having this good bearish momentum to now price is not really moving, right? Price is kind of stalling out a little bit, showing us that both buyers and sellers are in the market. And then this is our confirmation candle when we had that nice bullish candle, really. And honestly, I look for my bullish candle to close at least 50 to 75% of the previous real bearish candle, right? So when I see anything like this in the markets, I'm like, oh yeah, Morningstar pattern, let's go. Especially when you see it in any type of resistance zone. Oh yeah, it's money. It's money, right? So you really want to look at these at the bottom of downtrends, right? And this really just starts to show you that price is starting to reverse. And then we see, after we see this Morningstar pattern, we see price start to go back up in price. So that's always a good thing. Evening star pattern is the opposite of the Morningstar pattern. And we're going to see this at the top of a bull run. So you'll see uptrend, 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 bullish candle, bullish candle, bullish candle. Then you'll see the spinning top. Should be an indicator like, okay, we may potentially have a area where, especially, like I said, if you're hitting resistance areas or if you just create a higher high, things like that, you're getting up here and you're saying like, okay, I see that we were very bullish. Now we got a spinning top. So what is this telling us? Okay, this is telling us both buyers and sellers are in the market. Now we're waiting to see what is going to happen. Who's going to win this battle? This next candle really gives us our confirmation. We see this long bearish candle, pretty much completely engulfs. If these candles were right by each other, it'd be an engulfing candle, which pretty sure we'll talk about later. And just really comes crashing down, right? Really showing us like, okay, buyers have really entered the market and they making some noise. Dojis. So dojis are indecision candle. Same with like the spinning top, right? In my personal opinion, it's just showing you neutrality in the market, that both buyers and sellers are in the market, and no one really has a true stronghold of the market for that time frame, whether it be an hour, 4 hour, daily, no matter what it is. It's showing us that price. It tried to go up, right? The buyers tried to push price up. Sellers came in and tried to push the price down. Buyers came in and pushed it back up, right? So showing us indecision, that both sides are kind of having control, have some strength in this party, and neither one have relinquished exact power, right? So price is kind of neutral, and you'll see these oftentimes. And when you see these, you have to take into the mind that, are you at support zones, resistance areas? Are you creating higher highs, higher lows, lower highs? What is the market doing? Is it an uptrend, downtrend? What is it doing before you see this doji? And a lot of times that can help you kind of have a little insight to what this doji is really telling you or signifying to you. Bullish engulfing. Now, I love this pattern. I love to see a bullish engulfing. So a bullish engulfing pattern is a bullish pattern, right? So you'll see this typically on the bottom of a downtrend. And the bullish engulfing is a bullish candle completely pretty much engulfing a bearish candle. Now, this is your perfect example. Typically, it'll probably look more like this, because with the foreign exchange market, you don't have too many big gaps like that. More so in the stock market, you'll see little gap to the downside, which allows the bearish candle to be completely engulfed by the bullish candle. But typically, you'll see the close of the bearish candle and the open of the bullish candle in the same spot. And then you'll see maybe a little wick to the downside, and then huge, bull run up, really closing out and really just completely engulfing this candle, making it tell you, okay, the bulls are in the market. They're signifying that they have a lot of strength in the market because they just completely engulfed the last candle, which was a bearish candle. So it's showing you they completely engulfed the market. So now you're just looking forward to that confirmation candle, really that second bullish candle, and then that continuation to the upside, right? Always look for confirmation, because you don't want to get faked out. It's happened to me. It's happened to everybody. Practice good risk management, things of such. We'll talk about that for sure in another video. Now we have its counterpart, the bearish engulfing. So we see small little candle, right? We see price was moving up, start to lose that momentum, right? We're seeing this spinning top, right? We're seeing that long upper wick shadow to the upside, showing us like, okay, buyers were in the market, sellers came in, and even though they didn't close market in a bearish pattern, a bearish candle, they showed you they still here. And then we see this complete engulfing pattern here, right? Where it completely engulfs like really the next like 2, 3, 4 almost candles, really just showing us like, okay, bears are in the market. they're pushing price back down. Ooh, hitting my table, shaking things. Pushing price back down, and now we're showing like, okay, we're starting to turn a little bearish, right? So now we're gonna be looking for some lower lows and lower highs at this point. Because sellers in the market, my head be itching sometimes. 3 white soldiers. 3 white soldiers is a real simple pattern. You'll see it oftentimes. It's not really like the big eye opener for me. Like, it's not really a main one, but I do like to use this. And it's just as you see, right? So we had the bearish momentum, little candle here, right? No upper shadow, but we see these next 3 candles, bullish candles, are starting to gain in size, right? So we're seeing the size just become bigger and bigger with each candle, really just telling us that the bulls are gaining momentum as this time frame goes on, showing us like, okay, bears have kind of lost that. The bears, as in, the selling pressure has kind of died off a little bit, and now we're seeing that the bullish pressure is really picking up, right? We're seeing that these candles are in the market. They're increasing in size, right? Which means they're increasing. More and more buyers are coming into this market. More and more people are pressing the buy button, signifying that price is moving up. 3 black crows is really just the opposite of the 3 white crows, right? We're seeing bullish uptrend, and we start to see small red, bigger red, bigger red, right? So just telling us that, okay, the bears are in the market. They're in the market even more. They're in even market more. And we see after these, we see price continue to fall to the downside. That might be it. And that is it on the candlesticks. So let's just take a look at trading view here. See if we can find a few of these candlestick patterns. See if we can make something happen. And one cool thing I'll show y'all a trick. Let's see. Let's do the GU, because I think there was a couple of these patterns on GU. Boom. So right here is a perfect example of a bullish engulfing. On GU, this is March 4th. So we see this within the last couple weeks. We'll see if I actually know how to use this one today. Sometimes I'll be struggling. Boom. We got it, baby. We see this. You see this right here? Now, this is what we call a bearish engulfing. Or a bullish engulfing. My bad. Bullish engulfing. We see we have price coming down. Bearish. You're on a little spinning top. Bearish. And then we see this huge candle that completely engulfs 1, 2, pretty much almost 2, 3 of these candles here. Like I said, sometimes you'll have this lower wick, right, showing that sellers were still trying to push down. And like I said, you'll see these in areas of support and resistance, right? So when you already identify your support and resistance zones, it becomes very easy. One day I'm gonna repay for the paid version. You see these candlesticks a lot easier when you understand and you identify when support and resistance areas are in the market, right? So we see very big bullish momentum here. Let's see if we can find any others. Here we kind of have a doji here. Let me add this to my favorite so I can make this a little easier. Boom. Have a little bit of a doji here when it comes to this candlestick. This one right here, right? So actually I can do something a lot simpler than that. This one right here, right? So we're seeing both buyers and sellers came in the market, right? We had this big push up. We had this nice push down. Either way, price kind of closed right here at prices open, right? So price really didn't move too far. We also can say you almost pretty much have a little hammer here, right? So we're seeing little to no, and this is the power of candlesticks, right? We're seeing little to no wick to the downside, small real body, and a wick 2 to 3 times the size of this pushing to the upside, right? Showing us like, okay, we had sellers, boom, we had a lot of selling pressure. Price is starting to hit a resist or support zone, spinning top or doji, right? Telling us that price is kind of losing momentum, both sides, both buyers and sellers in the market. Small hammer comes in, right? Couple more spinning tops, dojis, and then, you know, we had a little bit of a bullish run, bearish run, and then we had this bullish engulfing, really giving us a double or triple bottom almost, if you look at it. And we'll talk about that when we go over chart patterns. Double, triple bottom in a sense. And then we saw this big bullish momentum candle, and then, you know, we seen it proceed. Look things to the upside. Now, another easy way, if you are using TradingView, and I can move this down here now, another easy way to identify some of these patterns, or just kind of help you identify, is if you go to indicators, I believe, technicals, patterns. No. Yeah, and you go to patterns, you'll see, look, it has a part where you actually can identify certain patterns, right? So let's just select doji, for example. Now this is going to tell us where the dojis are, right? So we have a doji candle here, right? And we see small real body, wick to both the upside and the downside. Price really was indecisive, right? We see another one here, another one here, another one here. Now, listen, I greatly encourage you to use this because it helps you identify it in the market, right? It helps it make it a lot easier. It even gives you a little description, right? You know what I'm saying? Boom. See if we can find some more. So that was doji. And to get rid of it, you just go back up here where it says doji and just hit this little X here. Let's look for, what's another one we talked about? Bullish engulfing. Does it hit bullish or? Yeah, bullish engulfing, right? So you're considering this a bullish engulfing, this a bullish engulfing. I really like this one a lot better as far as bullish engulfings. Now, I'm not saying this is going to be perfect. This is a pretty good bullish engulfing, but you can see, this is why I say you have to pay attention to price. You have to pay attention to where price is, because if you just would have gotten here like, oh, bullish engulfing candle, you would have been wrong, because we see price is still in the midst of a downtrend. And overall, if you're looking at this, excuse me, if you're looking at this, you would have been able to see in the big picture that price just gave you a head and shoulders pattern, right? Left shoulder, boom, head, boom, right shoulder. Price is coming down. The thing you would really want to pay attention to is not this bullish engulfing in this price area. What you would want to pay attention to is this big ass bearish engulfing right here. All right, this is what you want to pay attention to. This is telling you something right here, right? Especially a nice bearish engulfing candle right after a head and shoulders. Price is going to continue to come down. It's showing you and it has way more power. Look at this. Look at this candle. Look at this. Look at this. So let's see if we can find a couple more. Let's see. Ooh, let's see if we can find a couple hammers in here. Not too many hammers. I don't like that one. Not even gonna zoom in on that one. Like idiots, right? I can just tell where they're at price that they're not. Now, I'm not saying that this little cheat sheet here is going to be the best, because as we can see when it comes to the hammers, it's not really giving us the hammers we really want to identify. Because you want to see a hammer at the bottom of a trend, right? So this one may be a good one. Here, let's zoom in. Here we see a lot of bearish momentum. What is that identifying as? I can just zoom in. Whoa, what is this? I've never seen that before. Oh, that was my drawing tool on my little recording app. It always gets in the way, which sucks because I can't hit things on the side. So I guess we'll zoom in naturally. I don't like that one either. So I don't really like the hammers they're giving us. But that's okay. We get the general sense of it, right? So that is the power of understanding candlesticks. perfect doji right here. All right, so we see price was in the uptrend, right, nearing a resistance level of previous highs, and we see this huge doji candle, right here, huge doji. Now, what I do is I challenge you, study your candlesticks, go look at a cheat sheet or two, replay this video a couple times, and just go enter into the market. Not saying go actually place trades, but just go enter in the market and see how many candlesticks you're able to identify, right? When it comes to identifying these candlesticks, when it comes to anything trading related, time spent in the market equals time profited in the market, truly. So you have to get your eyes kind of used to seeing certain things, right? How I'm able to identify things like this head and shoulders pattern, right? Like I don't have to think about it. I see it. Left shoulder, head, right shoulder, double retest of the right shoulder, drop down, right? I can see that. My naked eye sees that. Like this is the first thing that pops out to me, right? I see the double triple bottom here. You can say you see the triple bottom here. Like you're able, the more time you spend on these charts, on these markets, the more you're gonna get used to seeing these things, and the more it'll just become natural to point them out. And the more time you spend just looking to see how they develop, especially if you're trading just a certain pair, like if you specifically focus in on GU, learn how your market moves, how your pair moves, how your asset moves, and that'll give you power, right? There's power in being specific. You don't want to have 15, you don't want to be trading 15, 20 different things, looking at a whole lot of different markets, especially when you're just a beginner, because different markets fluctuate differently. The candlesticks, even though candlesticks are generally the same, they're different for each market, right? How a candlestick pattern may move in GU may not be the same if you're trading US 30. There's different buyers and sellers in that market. There's different volatility in that market. There's different players in that market. So you have to get your eye used to these things, right? Used to seeing certain candlestick patterns, used to drawing up where your support and resistance zones are. And a lot of these things we are going to go over and further in other videos, but you have to get yourself used to identifying these things, right? And that is where power comes in. Like we have another big bearish engulfing, right? Look at that thing right there. Another big bearish engulfing. And this is one quick example. This is what I meant by you want to pay attention to a confirmation, because we see bearish engulfing, right? If you would have just entered the market here at the close, like, oh, I got a bearish engulfing, you would have been taken out of this trade. Price made this bearish engulfing and went right back up, created a whole new high, and then came down. This is why there's power in understanding what market, what you're trading. And that's the best example I can give you. It just came to me perfect. Boom. Huge bearish engulfing. And we see it engulfed the last previous, 7, 8, 10 candles? 20 candles. It took over the last 20 candles, really could say 22 candles, and then proceeded to make this big bearish engulfing and go right back up. There's power in knowing, and there's power in just being patient and waiting for that confirmation. So with that being said and done, hopefully you made it to the end of this video. If you're still here, drop a like, drop a comment, subscribe to the channel, and also what pairs are you trading? Comment what pairs are you trading? What's your favorite candlestick pattern that you like to use? Chart formation that you like to use, pair that you like to trade, and see you on the next one. Peace.